Ever wondered why some people seem to effortlessly accumulate wealth, while others struggle financially? Is it just luck, or is there more to it? Let's dive into the intriguing world of money. A world that holds immense power, a world that shapes our lives more than we often realize. Money, in its simplest form, is a medium of exchange. It can be as small as a coin or as large as a skyscraper, but its true power lies not in its physical form, but in its potential. Potential to create, to grow, to empower. In this vast world we are all players, but not all of us play the game the same way. Some of us live paycheck to paycheck, while others seem to have a never-ending stream of wealth. While it's easy to dismiss this as mere luck or inheritance, the truth is often far more intricate. It's not just about earning money, it's about what we do with it that truly matters. Enter the world of saving and investing. Two simple yet powerful tools that can turn the tide in your favor. Saving is more than just putting aside a part of your income. It's about creating a safety net, a cushion that can protect you from financial setbacks and open up opportunities for growth. Investing, on the other hand, is about making your money work for you. It's about planting the seeds of your hard-earned money and nurturing them with time, patience, and knowledge until they grow into a tree of wealth. Investing is not a get-rich-quick scheme. It's a journey, a process that requires understanding, discipline, and a dash of courage. But where do you start? How do you navigate this complex yet fascinating world? Well, the first step is understanding. Understanding the power of money, the importance of saving, and the potential of investing. Once you grasp these concepts, you're already on the path to financial freedom. Understanding the importance of saving and investing is the first step in achieving financial freedom. So why is saving so important? While money may not be the key to happiness, it certainly provides options and security. Saving is an essential part of that equation. It's not just about stashing away dollars and cents, it's about creating a buffer against the unpredictable twists and turns of life. A safety net for the uncertainties that life, with its amusing sense of humor, often throws our way. Let's delve a little deeper into this concept. Imagine that you're walking on a tightrope. It's a little nerve-wracking, isn't it? Now imagine that you have a safety net beneath you. Suddenly the tightrope doesn't seem quite as terrifying. That's what an emergency fund does. It's your financial safety net. It's there to catch you when life's little surprises, like an unexpected medical bill or a sudden job loss, threaten to throw you off balance. And then there is the aspect of financial security. Saving money can lead to a sense of financial stability. And let's be real, who doesn't want that? The more you save, the more you can weather financial storms without going into debt, and the more you can plan for the future. It's about taking charge of your financial destiny and not leaving it to chance. But it's not just about weathering storms and emergencies. Saving money also provides the freedom to make choices. It allows you to take advantage of opportunities when they arise, be it a dream vacation, a down payment on a house, or even the chance to retire early. The importance of saving cannot be overstated. It's about more than just dollars and cents. It's about peace of mind, financial stability, and the freedom to live the life you want. It's about being prepared for the future while enjoying the present. Saving provides a safety net for the uncertainties of life and paves the way for financial independence. Saving is not just a habit, it's a lifestyle, a commitment to your future self and the life you aspire to live. So start saving, because every penny put aside today is a step towards a secure and financially independent tomorrow. Now, imagine your savings growing without you having to lift a finger. Sounds like magic, right? Well, this isn't an illusion. It's the magic of compounding. Let's break it down. At its core, compounding is the process where the value of an investment increases because the earnings on an asset get reinvested. This means that you not only earn a return on your initial investment, but you also earn a return on those returns. And as time goes on, these returns can become quite significant. Think of it like a snowball rolling down a hill. At first, the snowball is small, but as it continues to roll and gather more snow, it becomes larger and larger. That's how compounding works with your money. Let's say you save $50 a month. In a year, you'd have $600. Now, let's say you invest that money and earn an annual return of 5%. At the end of the first year, you'd have $630. That extra $30, that's the result of compounding. Now here's where it gets exciting. In the second year, you're not just earning 5% on your original $600. You're earning 5% on your total balance of $630. So at the end of year 2, you'd have $661.50. And that's just with a small monthly saving and a modest rate of return. Imagine what could happen if you increased your savings or found an investment with a higher return. The possibilities are truly astounding, but remember, the magic of compounding doesn't happen overnight. It requires time and consistent saving. However, the longer you let your money work for you, the more money you can make. It's like having a money tree that grows more trees. So the next time you're thinking about skipping that monthly saving, remember the power of compounding. After all, compounding is the secret ingredient that turns small savings into large sums of money. But is saving enough? What about investing? Let's dive into the world of investing. You see, when you save money, it sits in your bank account, waiting to be used. But what if you could put that money to work, allowing it to grow over time? That's where investing comes into play. Investing is the act of allocating resources, usually money, with the expectation of generating an income or profit. It's like planting a seed and nurturing it to grow into a tree. Here, your money is the seed, and the investment is the tree. You plant your money in various financial instruments like stocks, bonds, or real estate, and over time, these investments can grow, yielding a return that could be substantially higher than what you would get from simply saving. Now you might be wondering, why invest? Well, the answer is quite simple. Investing can help you achieve your financial goals faster than saving alone. Let's say you want to buy a house in 10 years. If you save a portion of your income every month, it might take you longer to reach your goal. But if you invest that money, it could grow at a faster rate, helping you reach your goal sooner. Investing also helps you stay ahead of inflation. Inflation is the rate at which the general level of prices for goods and services is rising. If the inflation rate is higher than the interest rate on your savings, you're actually losing purchasing power over time. But when you invest, you can potentially earn returns that exceed the rate of inflation, preserving the purchasing power of your money. Remember, investing is not without risks. The value of your investments can go up or down. That's why it's important to do your homework, understand the risks involved, and make informed decisions. So, what's the bottom line? Investing is a powerful tool to grow your wealth and achieve your financial goals. It's about making your money work for you, not the other way around. It's about securing your financial future and building a legacy. So, if you're ready to take your financial journey to the next level, it's time to start investing. Investing is a powerful tool to grow your wealth and achieve your financial goals. But isn't investing risky? What if I lose all my money? Well, this is where the power of diversification comes into play. Imagine going to an ice cream shop. If you put all your scoops into one flavor and that flavor turns out to be not to your liking, you're stuck with a disappointing ice cream experience. But if you spread your scoops across different flavors, you're more likely to find something you enjoy. This is a simple way to understand diversification. In the realm of investing, diversification means spreading your investments across different types of assets. These assets could be stocks, bonds, real estate, commodities, or even different sectors or geographical regions. The aim is to manage risk and potentially increase your returns. Here's why. Different assets often perform differently under varying economic conditions. When one asset or sector is doing poorly, another might be doing well. So by having a diversified portfolio, you're not putting all your eggs in one basket. You're spreading the risk. Think of it as a safety net. If one part of your investment portfolio takes a hit, it's cushioned by the other parts that might be performing well. This can help to smooth out the bumps in your investment journey and potentially lead to more consistent returns over time. It's also important to remember that diversification isn't just about quantity but quality as well. It's not just about having a lot of different investments, but about having the right mix that aligns with your financial goals and risk tolerance. So, in essence, diversification is like a balancing act. It's about finding that sweet spot between risk and reward. It's about not putting all your scoops into one flavor but spreading them out to experience the full spectrum of possibilities. Diversification is a key strategy to manage risk and maximize returns in investing. Remember, investing is not a sprint, but a marathon. It's about long-term growth and stability, and diversification is one of the powerful tools you can use to reach your financial finish line. When is the best time to start saving and investing? I'll let you in on a little secret. It's right now. Yes, you heard it right. The best time to start is as early as possible. Why, you ask? Well, there's a magical concept called the time value of money. Let's break it down. The time value of money is a principle that essentially means $1 today is worth more than $1 tomorrow. This is because money has the potential to earn interest or returns if it's invested wisely. If you have $100 today and you invest it, it could be worth $110 or even more tomorrow. So think about it. If you start saving and investing in your 20s instead of your 40s, you're giving your money twice as much time to grow. It's like planting a tree. The earlier you plant it, the more time it has to grow tall and strong. Starting early also allows you to take advantage of something called compounding. This is when the money you earn from your investments starts earning money too. It's like a snowball rolling down a hill, gathering more and more snow as it goes. Before you know it, you've got a snowball so big, it's a force to be reckoned with. Furthermore, starting early gives you more time to recover from any financial setbacks. The markets can be unpredictable, and sometimes investments don't pan out as we hope. But if you start early, you have more time to bounce back from these hiccups and keep your financial goals on track. And lastly, starting early can help instill good habits. Regular saving and investing can become as routine as brushing your teeth or having your morning coffee, and these are habits that can set you up for a lifetime of financial success. The earlier you start saving and investing, the more time your money has to grow. So don't wait for tomorrow, next week, or next year. Start today, because the best time to start is always now. So, are you ready to take control of your financial future? Let's take a moment to reflect on what we've covered so far. We started with understanding the power of money. It's not just pieces of paper or numbers in a bank account. Money is a tool, an enabler, a means to create opportunities and security for ourselves and our loved ones. Next, we unraveled the importance of saving. Saving is not just about keeping money under your mattress. It's about setting aside a portion of your income regularly to build a financial safety net. It's about delaying gratification and making informed choices. Then we delved into the magic of compounding, often referred to as the eighth wonder of the world. Compounding is the process where your money earns interest, and then that interest earns interest, creating a snowball effect that can significantly increase your wealth over time. We introduced the concept of investing as a way to grow your money. Investing is not just for the wealthy or financial gurus, it's for anyone who wants to take a proactive approach to their financial well-being. And remember, it's never about timing the market, but time in the market that counts. We also touched on the power of diversification. Putting all your eggs in one basket is risky. Diversification helps spread that risk across different investment types to ensure a more stable return. Finally, we discussed the importance of starting early. The earlier you start saving and investing, the more time your money has to grow. It's not about the amount you start with, but the habit you create. To wrap it up, your financial future is not something to be left to chance. It's something you shape with your decisions and actions today. Embrace the power of money, the discipline of saving, the magic of compounding, the potential of investing, and the wisdom of diversification. Remember, your financial future is in your hands. Start saving and investing today, and watch your wealth grow. Want to become wealthy beyond your dreams? The journey doesn't stop here. To help you dive deeper into these topics, we've curated a selection of recommended videos for you. From beginner's guides to advanced strategies, these videos will provide you with more insights on saving, investing, and growing your wealth. In our playlist, you will find videos such as The Art of Budgeting, Investing 101, Understanding the Stock Market, and Mastering Cryptocurrencies. These videos are designed to help you take your financial knowledge to the next level. Remember, continuous learning is key in the world of finance. Markets change, new investment opportunities arise, and laws and regulations evolve. Staying informed about these changes can help you make better financial decisions, avoid costly mistakes, and take advantage of new opportunities. Remember, knowledge is power. The more you learn, the wealthier you can become. So don't stop here. Keep watching, keep learning, and keep growing your wealth.